Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here, and today we have another big drop. Last night when the S&P futures opened, they were down 4+%. The NASDAQ was down another 5 to 6%. We have pared those losses a little bit today, but we saw carnage across the globe in other foreign markets. The Hang Seng was down 13%. Now, granted, they were closed on Friday, so it was a little bit of a 2-day-in-one type scenario where they dropped for what they should have been down with the U.S. markets on Friday, and then obviously on Monday as well with the futures. But the point being is that everyone is scrambling out there. The economy here in the U.S. is basically at a halt. And what I mean by that is that if you're a consumer that was lucky enough to be invested in the market, in the bull market, you were probably still spending generally well. But with the stock market declining by this much, everything has come to a standstill. There's too much uncertainty. You see your 401k dropping basically 20% in a matter of weeks. And that puts you on hold from big purchases. And again, that's the kicker here, folks, is that while we may be fighting a trade war, the president fighting a trade war, what damage does it do here at home domestically to the overall economy over the next couple weeks to couple months or longer if no deals are struck? Is this a short-term thing, a negotiating tactic, or is it a long-term? Either way, a drop like this in the market will hurt the economy, even if it's a short-term factor. Now, everyone's calling for the Federal Reserve to cut rates, especially the president. The problem is they can't. Number one, they don't know how long these tariffs are going to last. Imagine if Jerome Powell comes out with an emergency rate cut, and then the very next day a deal is struck on tariffs. Oops, what would that do? In addition, inflation is going up because of the tariffs. And these are all things that we have to monitor and be aware of. This morning, this is interesting. This morning, the markets were rallying off their lows. We were only down about 1.5% to 2% on the indexes. And then there was a Truth Social tweet by Trump basically pushing back and saying, this is what we're doing. Doesn't matter. We're going to do it, etc. And the markets came back in. They've started to creep back up as tons of big names out there are coming out. In fact, Elon Musk over the weekend came out and said, hey, listen, we should have zero tariff policy or free trade with Europe. The question is, can we get it with everywhere? And these are all things that we'll find out in the coming days and weeks. Right here, you have the S&P 500. This is where we were at 4 in the morning. This morning, down precipitously. We have come back off of those lows. This was the rally. And then right here, we got that kind of Truth Social post from Trump. The markets got pushed back down. They're now trying to fight back as, again, markets are now down. If you look at the S&P, we are basically approaching 20% in a matter of 3 trading days. The NASDAQ, when we were at the lows in the overnight, was well over 20% in just 3 trading days. So this is basically 1987, but 1987 happened in one day. This is a spread out over 3 days. We will be talking about this for the years to come. I want to show you this, guys. If we go to the ES futures, this shows us our overnight data. I want to show you where the markets opened yesterday at 6 p.m. right here. Look at that flush. See this trend line? See this trend line on the ES futures? This is, by the way, the S&P futures. If we look right here, look at this trend line. On a technical basis, look at what was just tagged. COVID low to the bear market 2022 low on the S&P, to the low here in November of 2023. And look at that right down there. Now, see this candle formation? This is what we would refer to as a bottoming tail. It is a bullish reversal signal. However, there's a however here, folks. It has to close with this today. If we sell off throughout the day and come back down, it may not be a bottoming tail. But if you get a bottoming tail at this key level that I just showed on the charts, and I'll flip back to it right now, if we were to get this today, I would dare say that could be a buy signal for the markets. And there are so many stocks that are so beaten down. Listen, I'm a big believer that overall the markets eventually will go a lot lower. Okay, I've been made no qualms about that, no disputes about that. But I'm a big fan of the rubber band theory. The rubber band theory says that when you pull the markets in a straight line too tightly, the rubber band snaps back. When you look at a 3-day move, of, let's say, plus 20% drop on the NASDAQ, and then you look at where it is from the all-time highs, you start to say, okay, this rubber band needs a little bit of a snapback before it can be going down again and stretched again. And in other words, what did I do this morning already? I was up at 6. Actually, I was up before that. I was up around 4:30 in the morning. But by 6, I was starting to accumulate beaten down names. What did I buy today? I bought some Robinhood. I bought some Palantir. I bought some Apple. Now, remember what I do, folks. I don't go all in on my first buy because honestly, that would cost me a lot of money. All right. Instead, I layer it. I say, okay, Apple's down quite substantially. There's technical support here. But in case we continue to flush, I'm going to buy, let's say, a 1/3 position here. So I can buy another 1/3 here and another 1/3 down here, bringing my dollar cost average in. Good quality names is what I'm focusing on. I want to be clear on this. I'm not looking at, small cap, this small cap that barely surviving, right? I'm focusing on high quality names. Those will be the ones that bounce first, and they're the safest in this environment. And safety is key. When you see blood in the streets, you're not going for like the hope and dream, 50 bagger. Just go with the one that's going to bounce. In this market, something like Apple could bounce 20% in a matter of days. It really could. All right, so let's go through a couple of these charts. We can see the ES chart, the S&P futures, tagging this trend line right here. If we look at the NASDAQ, here, folks. Let's go to pre-market. The NASDAQ, again, is down sharply here on the morning session. But look at the trend line right here that we pierced at 4 in the morning, my time, Eastern Coast U.S. time right here. If we flip back to the daily chart, look at this. Your former pivot. So you have retraced, get this, guys, in literally since February 19th, you have dropped from the all-time high to your bull market 2021 high in basically, what is that, couple months? Not even a couple months. That is epic. Again, that should be, and I say should because nothing is in stone as we know. It's all probability based, but that should be a major technical support here. And again, a lot of this is going to come down to whether or not we see any budging on the tariffs, right? And I'm not saying they make the tariffs go away, but is it possible as negotiations? So supposedly Trump said that there are 50 countries that are trying to get in touch and negotiating on these tariffs. And the question is, would it be smarter to say, okay, if you're reaching out to us and willing to negotiate, we will postpone implementing these tariffs for, let's say, a month while we negotiate. As long as we're negotiating, that makes sense. All right. But so far, there's been no give by the administration. The other thing I want to bring up is the calculations for how these tariffs were imposed are literally, it looks like, I don't know, it looks like someone did it with no clue about anything economically. I don't know who put together these numbers for the president to impose these tariffs, but even a conservative think tank came out this weekend and said the tariffs, they make no sense. The way they were calculated is wrong. They should be actually they're about 4 times too high. 4 times too high based on the calculations. Now, some of these calculations, and I want to be clear about this, this is a good educational piece, is that a lot of the calculations are done based on trade deficits, not so much on tariffs being imposed on us. Essentially, the administration took and said, oh, well, listen, we have a $200 billion trade deficit with this country, so let's make that up with tariffs. The problem is this. Trade deficits are normal when you have the best economy in the world. Why? Because we have more money and we buy goods from other countries. So we get those goods and we give them money for those goods, but those goods are so cheap, which it makes it worth it to buy from those countries. Okay, so think about this example. This was one that Bill Ackman, I think, used. He said, or was it Peter Bookvar? Maybe it was Peter Bookvar. But the point being is he said that when you go out to dinner at a restaurant and you pay for your dinner, you actually have a trade deficit with that restaurant. That's what it is. You gave them money. They gave you food. It was a delicious meal, steak dinner, top of the line. But technically, you have a trade deficit. Now, you don't go back and say, oh, I'm going to tariff that restaurant. No, it was an exchange of goods. They gave us something we wanted, and we gave them the money for it. That's what a trade deficit is. And so you have to keep in mind that at least the way this was done was honestly a little bit lunacy. And you'd hope that egos will come down and they will redo this. You have the smartest people, even Jamie Dimon, coming out today and saying, hey, listen, this is not the right calculations. Essentially, this is not the good thing. This is going to create inflation. It's a tax on us as Americans, but we're going to be at the mercy of the administration. Will they back down, or will ego keep them from admitting it? And by the way, I know a lot about ego, and I'll tell you why. As a younger trader, I hated taking losses. I still hate taking losses, but man, I hated to admit I was wrong. That was ego. And you know what happened? The market taught me a lesson, and taught me that lesson 100 times over, that sometimes you just got to admit you were wrong and move on. Okay, just the nature of the beast. And once I did that, I actually became a much better trader. And I think that's something that we all have to learn. It's hard to do. Listen, no one likes saying that they were wrong, but we all are from time to time, and we got to figure it out. All right, back to the charts, guys. We got a lot to discuss here. So let's get into it. So we know the Qs pre-market hit right here. Amazing. By the way, the NASDAQ 100 futures last night were down over 1,000 points at one point. Massive drop there. Take a look at this. This chart I showed last November and December. Okay. This chart is, again, and I've showed you guys this since, but I think it's remarkable how I said, listen, the high, this is a perfect parallel. You connect the COVID lows to the bear market lows here of 2022. You drag that trend line. All right. So this is where the initial trend line was. We drag it up to the bull market high of 2021. And then look right there. And I said, guys, listen, did I think we were going to collapse this quickly? No, frankly, I didn't. But did it say to me it marked a major potential top? And look at how far we have fallen. And this, by the way, this does not show today's price action. So today's price action, we're like down here. But look at how close we are to target already. All right. And that would be incredible. Think about how long it took to go from here to here, or even from here to here. And then look at the elevator or jumping off the building that we have seen since then. Another very important chart. This is one I brought back up late last year when the stock market was at all-time highs. Everyone was bullish. People were saying Gareth's an idiot. Markets are going to go up, blah, 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 blah. And ultimately, logarithmic chart connecting the 1929 high to the dot-com high right there. And look at what's happening. All right, these are just breadcrumbs, and I want to be really aware of that. None of these by themselves told us this was 100%. In fact, there's no such thing in trading and investing as 100%, but they're breadcrumbs leading us to the most probable outcome. And these type of charts, when you follow them, they can be unbelievably helpful in guiding us to at least be more careful, right? I mean, again, it's you see this and it's like, okay, well, maybe I shouldn't have all my money in speculative meme stocks at this point, right? I mean, there's some, or even honestly, even in the Magnificent Seven, we've seen what's happened to them. Speaking of which, take a look here, guys. Here's your NVIDIA chart. There was your head and shoulders. It is gapping lower. It is due for a short-term bounce, but technically, I still think it's going down here eventually. Pre-market, you can see again, we're kind of trading in this $90 level right here. So we are down again today. It was as low as 86 in the early trading morning. But again, if we go to 86, it brings us down to this level right here. This, again, area right here from the head and shoulders, this would be your calculation target. Apple, I did some buying on Apple this morning, starting a small position. Why? Because we were trading at 180. And you might say, well, the target's a little bit lower. It's around 179 for the head and shoulders. And then there's a gap fill right here. But because I don't buy everything that I want at one time, I get my skin in the game, essentially dip my toe in the water here at 180. And then if it goes down here, I'll just add again at 174, let's say, bringing my dollar cost average to 177. And then when it bounces, you'll get bounces, folks. You'll get big bounces on these things. Palantir, another one. Palantir getting hammered this morning. If we take a look, this is trading around $68 per share. Here's a trend line that marked Friday's lows. We are going to be gapping below that. There's a pivot low right here at 64, 63.5. That's on watch. But remember, in February, this stock was $125. It is now, get this, guys, it is now down to the current levels here, 46.5% in a matter of 2 months. Incredible stuff, guys. It really is. Robinhood. All right. I nibbled a little bit on Robinhood this morning. Same kind of thought process. The stock was trading at $30 right down here. There's a gap fill right here. And then just below, there's a lot of support. I'm slowly getting skin in the game on some of these ones that are good quality companies that should bounce back. All right. So again, those were just some. By the way, I put out a lot of trade alerts this morning for members in Smart Money Stocks because I'm just, literally dollar cost averaging, adding new positions. I mean, this is the market. And I've always said this. Listen, when there's extreme fear, when the VIX is over 45, this is where you want to start accumulating. It doesn't mean there's a bottom when the VIX gets above 45. It means if you're going to dollar cost average, that's a good place to start. And if we flip back over and take a look at the VIX here, we can see where the VIX is trading this morning. The VIX, by the way, this morning was up to 60. It's back to 40, about 48. But this type of move, if you look back here in August, we got up to about 65. Historically, right over here is around 35 or to 40, right? And that's always been a buying opportunity. Remember, when the VIX is high, it means the markets are low. And then when the VIX comes down, that means the markets are rallying as volatility. It's basically an inverse indicator. Here's your COVID pop. Granted, we haven't gotten up that high yet. But again, people literally thought the market, the world was ending at that point. That's why COVID, the move got so dramatic on the VIX. All right, let's look at a couple others here. Bitcoin over the weekend. We talked about the resilience last week of Bitcoin. Now, the kicker here was that Bitcoin was resilient, but one of the things I warned you guys about is that sometimes Bitcoin has a little bit of a lagging factor. Like it holds steady initially, and then eventually people panic and dump it anyways. And that's basically what happened over the weekend. All right, so for me, what did I do? I started to nibble a little bit more here. We did kiss my upper range of Bitcoin in terms of support. We didn't officially tag it, but you can see this high. This is my support zone. And we did kiss it. We've gotten a good bounce on Bitcoin here as well. But again, we are now nearing this level. And if you remember, another thing I've said in these game plans and trading the closes is that it's very unlikely. When we were trading up here, I said, when you're stuck between resistance and a support level, it's unbelievably unusual to not at least get down to support. And lo and behold, we kissed support. Now, I still think we're actually going to go down eventually and hit it, maybe even go down to 70,000. But the point being, again, is that was a beautiful little drop over the weekend. But now finally getting into a range where you can start making a case that it becomes a buy. All right. Again, I'm not aggressively buying Bitcoin yet, but I certainly am monitoring it as it comes in here. Gold today was down tremendously. It is bouncing back. I did take half of my short on GLL off the table on Friday on the dip, and I'll hold the remainder if we come back into here. I still love gold mid to long term. But again, one of the other things I told you guys is that when gold or any chart is in a parallel upsloping channel and it breaks above, it's usually very short-lived. It's what we call in the trading game a bull trap, meaning they're trapping the bulls thinking it's a breakout. More often than not, it goes up and then it pulls the rug back on and comes back into that parallel. So just keep that in mind on upsloping parallels. Silver, I did pick up a little silver on Friday. So far, so good, guys. It did overnight come down and tag major technical support, but I finally started to nibble on some silver here on the long side. And then copper, I covered my copper short on Friday. Kind of wish I didn't do that because I could have gotten a little bit more out of it, but we do have copper sitting on major technical support right here. I actually think copper could be due for a technical bounce as well. Looking at oil just continues to stay weak, guys. And again, why is oil weak? Not because all of a sudden everyone's producing a zillion more barrels a day. It's because tariffs are going to slow global trade. By the way, this exact thing happened in the 1930s. I don't know how many of you guys are students of history. It was called Smoot-Hawley. And when we had the beginning of the Great Depression and the collapse in 1929, what happened is the government got together and said, all right, we're going to tariff all these other countries because we think that if we drive the jobs to the U.S. and produce in the U.S., it will actually help our economy get out of this conundrum, this collapse, this depression. In fact, it actually prolonged the depression. all the way. Basically, the economy in the 30s was horrendous, the entire 30s, like literally a decade plus of horrible, horrible economy or economics. But what got us out of it, and this I hope doesn't happen, it was World War II. All right. So when we entered World War II, you had to start, basically the government had to start spending a lot of money to build tanks and to build, all these things and to build ships and all these things and bombs and so on, and airplanes. And that got us out of that kind of long depression period. But I guess my point is that historically, tariffs have not been good. Doesn't mean that's going to be the case. I always want to say, past results don't always guarantee the future result, but history is a great guide to what can happen. And I would just encourage people to read up on that. I think that's fascinating. All right, looking at natural gas real quick here, folks. Let's take a look at nat gas. Nat gas kissed support again right here, getting a small bounce. Not much to write home about here. It's holding steady. I still think eventually it breaks this support and trades down here. But as of now, that's where we are. All right, guys, I've got to get to my trading room. This is going to be insane. Friday, we had something like 15 trades in the morning session. It was nuts. Just winners across the board, all winners, in fact. It was pretty incredible. But the Apex Live day trading room just about to get started. And then also, folks, the swing traders, we'll see how these longs that I've been accumulating play out. It's going to be a wild one. It's going to be intense. But this is, again, where good investors picking up quality names can do very, very well in the short term. If we get a bounce. Big if, but if we get a bounce. You guys have a great one. Thank you so much for tuning in to the game plan. I'll be back for trading the close today. Take care.